Welcome back, everyone, to yet another exciting session coming up this morning for all of us at Digital Money 2020, organized by Payments Council of India. We are glad to inform you that this year we have received an amazing response for digital money with over 1,500 registrations from stalwarts all over the world wanting to participate in the virtual conference. Wow. So, without any further ado, I would like to commence with our next session. Our next session is a panel discussion on the topic filling potholes of the digital payment superhighway. And for the same, I would first like to welcome our moderator, Mr. Rakkappan, Senior Director and Head Government Relations, India and South Asia Visa. We welcome you, sir.
Thanks, Garima.
Yes. Along with that, I would first like to welcome our other esteemed panelists. We have Mr. Byas Nambisan, Chief Executive Officer, Ezetap. Welcome, sir.
Thank you.
Yes, Mr. Sachin Ramchandani, Senior Vice President, Banking, Zeta, India. Welcome. And Mr. Avinash Godkhindi, Managing Director and Chief Executive Officer, Zaggle. We welcome you. I would now request Mr. Rakkappan to please take over the audience. Thank you so much.
Thanks, Garima. Good morning, everyone.
Morning.
Morning. Thank you all for finding time and visiting today's event. My name is Rakkappan, and I head Government Relations for Visa for India and South Asia. And as Garima mentioned, we have a stellar panel today. We all know, and we are witnessing a breakneck speed of developments in the digital payment space. While businesses are focusing on delivering bouquet of payment products and working towards the ease of doing payments, it presents challenges for the regulator to keep up with the pace. Finding the right balance between facilitating innovation and ensuring financial stability and consumer protection is an inherently difficult task for the regulator, and there are no quick or easy solutions. This session will capture the issues faced by the businesses needs to be plugged, if any, and potential regulations. Now, without much ado, let me go to the panelists. Each panelist will have 3 minutes to respond, and we have 3 rounds. The first round is pandemic, payments, and respective businesses. So, Byas, my first question is to you. Ezetap is a leader in universal payments, buy now, pay later solutions, etc. And it has evolved its business, its target market, focus areas, solutions over the years. So what has Ezetap done well during this pandemic, and offer suggestions to broaden or deepen digital payments?
I think the first thing we did was, borrow from the UK from World War II, right? Stay calm and keep working. And I think that was the most important thing. Is it's easy to get lost, in a panic mode when you're faced with a crisis. So I think as a team, we stayed calm, figured out what are the things that are, what are the bad things that are likely to happen, and how we managed through that. It was important for us to keep the team together. We didn't downsize our team, so we tightened our belt, found ways to cut our costs so that we could keep the team together. And I believe that we were going to come out of this. It was a matter of, at that point, we didn't know whether it was 3 months or 6 months. But, I felt certain that we would be coming out of it. And it was important for us to stay together as a team to be able to pull out of that. And, so we did that. And then as we learned how to operate remotely, we learned we also needed to, change our skills a little bit in managing remote work, and also managing employee health and, welfare remotely. So those were important things, just keeping us together through the pandemic. The business itself, we said, okay, you got to just be patient. Things will turn around. Let's work, focus on finishing our products. Things that we had on our bin list, let's go complete it. Let's do that. Let's wait for the business to turn around, because we can try pushing harder. Things wouldn't change until they were ready to change. So we were just patient and calm. That's really sort of how we navigated through the pandemic. Through those 3-4 months of the worst part of the pandemic. And then in the second half of the year, we saw business come back. Our partners started operating. Businesses come back, and not everyone's fully back yet, but largely we're back, and we've look at a decent year. We're going to grow 50% year on year this year. So it's whatever we've done, I think so far has paid off.
So, Byas, if I may ask you, about the products that your company has, what are the key successes during this pandemic? Which products have done very well, especially during this pandemic?
Look, the products that have done well for us, clearly anything that's contactless, has been important for the market, and we've benefited from that. One of our high points, for example, is like many others, we offer UPI, and our UPI, our biggest customers like Amazon switched 100% from cards to remote pay and UPI, and we had to fine tune our solutions for customers like them, and then we've discovered that we actually run the highest success rates on UPI across any player in the country, because we fine tune for our big, huge global customers, and so those have been some of the successes that we've had during the year.
All right. Thanks. So Avinash, Zaggle is a leader traditionally in the loyalty and rewards business, but now I believe it also specializes in expense management systems. So I believe this is more relevant during the pandemic and of course beyond, because several companies are putting this expense management system in place. So I just wanted to get your thoughts on how has this impacted your business and what are the key challenges that you're facing?
You're on mute, Avinash.
Yeah, hi. So it's been a very interesting phase for us, Ram. When the pandemic hit, we were, as everybody else, a little concerned as to how are we going to cope. Our first priority was our employees. We wanted to make sure, as Byas said, that people are able to work from home, people are comfortable, people are taken care of. And second, most important was our customers, right? So we got in touch with a lot of our customers, also customers who were on the verge of signing for the platform. So what we saw was that possibly because of the pandemic kicking in, a lot of contracts and a lot of discussions that we were having with a lot of enterprises, but also mid-sized businesses, a lot of them reached fruition signing during this pandemic. And we got a lot of contracts because everybody was looking to figure out how can I control costs. The one very interesting pattern that we saw was the last thing that almost all businesses wanted to do was to retrench their employees. So before they took any of those steps, people wanted to say, what are actually my costs? How can I control them? Is there a way for me to, look at applying science and tech and design thinking to my expenses and bring in some, efficiency there? And a lot of the thinking historically has been around accounting packages. And what's very clearly shifted is that most businesses and companies are looking beyond their CFO's office to figure out how to control costs. Cost is no more the responsibility only of the CFO or the CEO. It's a pan-organization requirement. And hence, the way the data is presented, the way data is consumed and analyzed has to be something that, say, an HR head should be able to, act upon. A marketing head should be able to act upon, not just people who understand the accounting packages. So that is one very interesting phenomena that we saw, that a lot of companies and businesses started to adopt this. Challenges, obviously, I mean, we had the same set of challenges that everybody had. A lot of it was, as they say, more in our own minds. We were very worried as to how this whole thing was going to shape in the initial few weeks. And as business started to grow and, we started to get more and more contracts, we saw a new energy kicking into the team, and the team was looking at this as now more of an opportunity, genuinely more of an opportunity to go out there and figure out what partnerships can we, sign up. So, for example, we signed up a bunch of banks with whom we were talking to partner to cross-sell our expense management platform to their SME customers. Right? So whether it's DBS, whether it's ICICI, Yes Bank, a lot of these partnerships that we were talking of for a few months before that, all converted into signing, and now we are getting a very decent amount of traction there.
Okay, thank you. Sachin, Zeta is a lead. I believe you guys are you've built some stack for FIs for cards, loans, authentication, FRM businesses, etc. Just wanted to know from your standpoint, the very first question for you would be, what's your view on opportunities that lie ahead, and where are the potholes that you see in the line of business that you're operating?
Yeah, thank you, Ram. So I think the big change that the pandemic has brought about is this realization that payments are no longer a matter of convenience, right? It's almost a necessity. And we've seen this over the last few months. We've seen consumer behavior change. There's been a definite sort of a flight to digital. There's been a flight to essentials. And as you know, Byas was mentioning, there's been a flight to consumers preferring tactics, right? The question really is which of these behaviors will stick and become permanent. Right? And I think from an industry perspective, and to state the blindingly obvious, right? I think digital payments in India has made great progress over the last 4 to 5 years. We've achieved, I think, 3x more volumes over the last 3 years than we did in the 10 years preceding that. So whether it is creating the basic, infrastructure, railroads, the rapid adoption of real-time payments, the introduction of newer and more sophisticated payments and acceptance mechanisms, the progress has been substantial, and it's got us to about 100 million transactions per day, give or take. But in my view, if we are to truly democratize the digitization of payments and get to 10x of where we are today, so get to a billion transactions per day, say by 2025, then there are three big challenges that we need to address. Right? The first is the overarching problem of digital access and ensuring adoption. And as an example, we have over 850 million debit cards in India. Debit cards are by far the most all-pervasive payments instrument. However, less than 10% are active at POS. Right? And most of that activity, even today, happens only in Tier 1 and Tier 2 cities. All of us talk about UPI and the fact that adoption of UPI is increasing. The fact is that there are still only about 100 million or so UPI users. So the question, in my mind is, how can we sort of create enough awareness and engagement amongst non-users and move them to the digital payments bandwagon and get them to stay there? I think a big part of the problem has to be, solving for acceptance penetration, and I'm sure Byas would have far more insights there. But 5 million or so physical POS terminals in the country the size and breadth of India is grossly inadequate. The second chapter that I want to talk about is the fact that a majority of the banks in India today run their entire system off of legacy technology stacks, and these stacks are frankly relics from another era. I mean, there's no other way to put it. These stacks not only inhibit the kind of experiences that you can provide to your customers, they slow down GTM cycles considerably, and they're not scalable, right? And this potentially results in more friction, in higher transaction failures, and that has a direct impact on offtake. And the third sort of challenge that we need to address as an industry, and I think severely dent consumer confidence in digital payments, is around managing security and risk, and that's an ongoing sort of a consideration and requires massive collaboration across the board. And so some of these areas around technology, around security, around removing friction, improving activation and engagement is where we at Zeta feel we can really add value through our cloud native, API friendly, mobile first tech stack. So we provide an integrated core and processing platform, and so everything from a modern cloud-based core banking system to a modern switch, a card management system, an ACS, and really intuitive sort of front-end UI UX. And to be fair, I think post-COVID, we've really seen banks now taking cognizance of some of these challenges, embarking towards end-to-end digitization, and we're having some really great deployments and conversations.
Thanks, Sachin. I mean, it's great to know the pandemic has actually impacted everyone, but it's great to know that the businesses have stood up to take this as a challenge. And some of the topics that your businesses are rolling out have been quite useful in broadening the digital payments. So moving on, the question is about the regulatory ecosystem. So Avinash, which segment of payment products have witnessed a challenge in terms of keeping up with the fast-paced developments in the payment space and regulatory development, and how is it impacting?
Well, I think it's a combination, right? In some areas, regulators have moved very fast. In other areas, regulation possibly needs to move a little faster. I think the pandemic also brought to the foray a lot of areas which are traditionally done in a particular way, which need to be completely relooked at. I'll just give you a very simple example, right? If you want to open a current account today for a business, and that's something that we are grappling with as we are working on our new banking platform. The one of the requirements that the regulator has is that there's an insight visit that is required. Right? So somebody has to go to the office premise of this business before the account can be opened. Now, with the gig economy kicking off, and with people working literally from everywhere that they want, one of the big issues that crops up is what is an office, right? And where does this on-site visit actually happen? And is there any relevance to this today, given the pandemic, right? So these are kind of things which are possibly areas where regulation could relook at, right? But overall, I think businesses have not necessarily had challenges, Ram, coping with the speed of regulation. I would say a lot of businesses, both in fintech and more so traditional, as Sachin said, the banks and other ecosystem players have struggled because a lot of the things that have been spoken of in conferences like this have not actually got executed in those institutions, right? So we all talk of digitization, we all talk of being able to actually use AI and chatbots, but if you actually look under the hood, a lot of the institutions have actually been found lacking, if I may use the word, in the level of digitization and automation that they have actually used. And this is true for PSU banks, but it's also true for a lot of private banks. Right? These are the kind of things which, if genuinely we, as an ecosystem, we genuinely all have to commit to increasing the digitization and improving the consumer experience, improving the experience of businesses who are using these products and services. Otherwise, we just talk in these forums, but when it actually comes to much greater adoption, we're going to see that gap, right? Because consumers they're very smart. They see through this. So if we as an ecosystem can collaborate and work towards making sure that the experience is seamless, I think we'll see that 10x adoption. Until then, we have some distance to cover.
No, so Avinash, just a supplementary question to you. Just the question for you is basically the regulatory impact. I know Zaggle is in the rewards, gift cards, and stuff, and a sudden regulation someday. So my question to you is there a regulatory burden at this stage in the business that you're operating in? Are there any opportunity, or do you think the regulations need to be there in some lines of your business?
So I think more than the burden, Ram, what I would say is there is a certain degree of regulatory uncertainty. I wouldn't say that's necessarily coming from the regulator alone, but overall the chatter that's there. What we would, from our perspective in Zaggle, would look forward to is a more stable environment around regulation. Right? Whatever the regime is, whether it's around MDR or whatever, as long as we know that this is how it's going to be, and it's going to be for the next foreseeable years, we can build a business model around that. Right. The challenge that I personally feel is if it keeps changing, right, and changing at a very fast pace, then for a business to actually, a fintech to build a business model around the rules becomes very tough, right? So I mean, to give you a cricket example, just tell us whether we are playing T20 or one-day cricket, right? What are the rules? We'll adapt to that. We're extremely flexible. Indians are extremely flexible, and fintechs are very flexible. Startups are very flexible. So, but we just don't want it to change between 2020 and ODIs and test matches. This stability.
Thanks, Avinash. So, Sachin, I don't know whether you agree with what Avinash has just mentioned, but as you know, many non-banking players, they are entering in the payments industry. So, what do you think is the role of technology in general and service providers like Zeta in particular? Um, what role can they play to accelerate this trends of the non-banking players entering into the payment sector? And there is also a view that new entrants must follow the regulations in the payment industry. So, what's your view?
I think that's a great question, Ram. I'm actually reminded of something that Brett King, who's the erstwhile CEO of the erstwhile Movin Bank, he famously said, actually written a book called Banking Everywhere but Never at a Bank. And I think India's commerce landscape, honestly, is an apt example of that. And over the last few years, the biggest drivers of digital payments growth in India have been the emergence of new commerce platforms, right? Whether it's the likes of Paytm and Google Pay and Phone Pay sort of becoming preferred commerce interfaces, or the multitude of fintechs, wanting to create a neo-banking experience. And that experience could be a lending experience, it could be a savings account experience, it could be a prepaid experience, it could be a combination of these. But the underlying payment instruments, the bank accounts, the credit cards, the debit cards, are all owned by licensed regulated entities. So how the vehicle of delivery has changed. The bank, in some sense, continues to be the custodian of the regulation and compliance, but the non-bank platform now delivers the enhanced customer value. And all of this, by the way, gets done using modern technology. This is a space that we at Zeta actually call embeddable banking. And the objective here is to help banks and fintechs and commerce partners collaborate and deliver hyper-personalized experiences. So, for example, if a fintech wants to launch a lending experience for a certain market segment, Zeta will sit between the fintech and the bank, provide the fintech with a sandbox which would take care of all of the RBI compliances, and the fintech can basically focus on creating a really great customer value proposition. Your second question on whether non-banks should be regulated. My personal view is that regulation should cover entity that directly manages customers' funds, right? And directly being the operative word. Example, payment aggregators. Or any entity that's entering an existing regulated space. So if a fintech, for example, wants to directly launch a prepaid instrument, then they ought to be licensed under the PPI regime, right? I mean, there's no question about the fact that protecting customer safety and security is paramount. Having said that, and because we're in the technology space, every now and then, ecosystem participants might come up with a revolutionary idea that's backed by technology that is so novel that existing regulations may not cover them. In that case, I think the regulator should enable like a graded approach, whereby such technology is tested in a controlled manner before being allowed to go to the larger market. And RBI's regulatory sandbox initiative is a great step in that direction. But I'd say this, last 10 seconds. In general, from a regulation perspective, I think RBI has been very, very progressive. I would in fact go to the extent of saying that a lot of times the industry struggles to keep pace with new opportunities that regulation brings along. And you know this, right? I mean, really progressive regulations like tokenization, recurring payments, account aggregator frameworks, offline authorizations, etc., are potential game changers. And some of these have been on the table from RBI for close to 2 years now. Right. The fact is that industry and banks in particular are just slow to adopt. And to sort of echo what Avinash was saying, a large part of the reason they're slow is because their current technology stacks, whether you're a PSU or you're a private sector bank, just doesn't support faster deployments.
Thanks, Sachin. So, Byas, do you share the views echoed by Sachin and Avinash? Could you also give a glimpse of the impact of regulations on the products that you're dealing with?
Sure. Yeah. I mean, I agree with what both of them have said. And, if I had, look, I think we've had a lot of good regulations, things that have moved us forward. But one of the characteristics we have is we go through somewhat from clarity to uncertainty and confusion. New regulations come out, everyone is confused. What does this mean? How is it going to impact us? And we spend an inordinate amount of trying to get clarity. We get semi-clarity, then things change again, right? So this, Avinash had mentioned earlier, I think uncertainty is a killer for any industry, right? Industry and investors like certainty, and you can operate and start planning when you have certainty. So I think that has been one of the big downsides on this front is the uncertainty. One day MDR went to zero. There was question, is it just for, RuPay and UPI, or is it also for Visa and MasterCard, or are they going to go after Visa and MasterCard next, right? It brings a lot of uncertainty to the industry. The other one that is, stands out for me is some of these regulations fly in the face of economic logic, right? Zero MDR is an example. You do want players who offer and create this infrastructure to have economic value and get paid for that. So by zeroing out MDR, you're taking away the economic value of playing. Same thing as they've put zero MDR for large businesses who can actually afford to pay MDR and BIPs, while not offering the zero MDR to the small merchants for whom MDR is actually a bigger challenge. And then the other one is you look at payment aggregators. Payment aggregators are now required to monitor that the products sold by merchants are not fake. That's the role. Should not be a role of a payment aggregator who's a facilitator, right? It's the government trying to get the payment aggregator to do what they themselves have failed to do. So those are the things, again, doesn't make sense. The fourth element to me is it often is impractical. This 30% limit for UPI transactions. How is a player going to manage that? You can't control the number of merchants you sign on, because every player can sign on every merchant. Merchants have multiple payment providers, right? So how do you determine what is 30%? You can't stop 30% of transactions. You may hit 30% on 22nd of the month. What are you going to do after that? Are you going to stop taking transactions after that? So those elements of regulations, the uncertainty, the lack of economic logic in some cases, and impractical ideas, I think slow us down and create a lot of chaos in the industry before there is clarity. So I think if we could somehow skip that step and have pre-discussions that address these things, I think the industry would move in a faster and more effective and efficient manner.
Thanks, Byas. Sachin, I think one other issue that we are is the legacy technology. Businesses are now working off legacy technology, and we know that there is advanced technology some of the businesses they use. So, given the onset of COVID and immediate need to go digital, have you seen a change in the mindset of banks or the players or partners that you work with to modernize the legacy payment tech platform with new age solutions that probably your company or others provide?
Yeah, I mean, so this is something that we at Zeta feel very, very passionate about, and I think it's extremely important that the industry and specifically banks address this legacy tech versus modern tech conundrum quickly. Let me ask you folks a question: How often does your Apple or Google or Microsoft upgrade your mobile apps or your operating systems? Once every month, maybe every fortnight. Do you know how often bank stacks get upgraded? Once every 2 years, once every 3 years. And the question, really is that if this is, unheard of in the new software world, why should it be different in the banking world? The basic point is that the way software is written today has changed considerably over the last 5 to 10 years. The fact also is that the current banking technology stacks are really, really inflexible. They've been built 20, 25 years back on mainframe, monolithic software, written in archaic languages, and are not really built to create the kind of experiences that modern customers demand and deserve. And as a product manager, I've been through this myself. Not only do new product launches and change requests take time, very often what gets delivered at the end of the cycle is vastly inferior to what was initially envisaged. And let me talk about a couple of sort of related and pertinent problems. Right? Most of us who've been associated with banks would know this, that existing banking technology stacks are basically a composition of multiple different service providers. Right? So someone will provide you with a core banking system, someone else will provide you with a payment switch, a third vendor would deploy a card management system, and then basically there'll be one vendor who'll stitch up a mobile app for you. Now, mishmash, patchwork of a system is heavily bandaged and done together, and that inhibits scale, that inhibits time to market, and it of course limits the kind of experiences that you can provide. Uh, a lot of us consider Apple to be the benchmark on design and experience is partly because they control every single component of their stack. Right from the operating systems to the hardware components to the chipset, everything is controlled by Apple. The other, very, very, contextual and topical sort of problem is that of scalability. And I'll give you a couple of recent examples, right? Whenever some of our large e-com merchants run their festive season sales, and this happens every year, when Flipkart does its big billion day sale or Amazon runs its festive sales, issuer systems experience frequent downtime. And now with UPI transactions scaling the way they are, and specifically microtransactions happening at scale, this problem becomes even more pronounced. And that's because these bank systems really haven't been architected for scale. By contrast, cloud native stacks, like ourselves, like Zeta, we provide for infinite scalability. We actually demonstrated, 1 million transactions per second in front of a live audience in our ACS. And the reason I'm telling you this is because 1 million is an obscene number. It's 6x the world's volume, but that's just the power of cloud computing. And so what I'm trying to say is that there have been attempts made by banks to digitize certain workflows, right? So a bank will try and digitize an onboarding workflow, or pick up another workflow and try and digitize it, but it's not enough. The underlying plumbing needs to be fixed. And we at Zeta really think of technology from a first principles basis. We think that the next phase of growth will be driven by technology stacks that are composite, that are end to end, mobile first, API friendly, cloud native, all of those good things, right? And that give the banks the freedom to build world class experiences. And I think that fundamental shift in thinking is what we are seeing now. To be honest, we're seeing banks think like tech led organizations as opposed to banks who also have technology. And the analogy that we often quote to some of our banks is that of a Barnes and Noble that owns a brick and mortar bookshop going digital versus an Amazon, which is inherently a tech company selling books. The experience that customers get is vastly different, and that's the evolution in thinking that fortunately we're now observing and has accelerated post the pandemic.
Hey, thanks, Sachin. So, Byas, moving to you. Your firm and many other firms these days are focusing on the role of analytics, VAS, value-added services, and to some extent interoperability wherever it is possible. So, just wanted to get your thoughts on what are the potholes when it comes to the data and analytics point of view.
Look, I think for us, the key thing in data analytics is while we're able to assess the transaction data that go through us, the ownership of the data is actually split because we work with partner banks and we cannot individually separate sell out data for any of the transactions because the data is actually owned by our partner banks. So we do get a lot of aggregate data, we do analytics, and we can provide it to our merchant partners like the banks. But we don't actually offer it, to anybody else. It's a limitation of the model we have. But I think we've been able to, since we see data across multiple banks, we actually create a really good picture of what's going on in the industry, and we are able to share that, in an anonymized way with our bank partners. Right. But we're not yet in the place where we can actually monetize the data yet. I would love to be able to do that. We haven't figured that out yet.
Thanks, Byas. So, Avinash, if I may ask you the same question around data and analytics, and also you can touch upon what Sachin was talking about, the difference between the legacy systems and how in the banking there is a need to constantly upgrade the system. So, just want to check. I mean, because this is one of the key potholes that we've been hearing, especially when it comes to the expansion of digital payments.
Yeah, and the two are linked. I agree with Sachin on this. The challenge with data is also linked with a lot of the data actually sitting with the legacy systems in the banks. And how do you access that data in real time? The key with data, Ram, as you would very well know, is it's not that what data do you have, right? It is, do you have that access to that information in real time so that you can action on that, right? So I'll give you an example. We are on the cusp of launching our first business credit card in partnership with Visa, which is called the Founders Card. And one of the things that we are trying to do there is to figure out how can we make more intelligent lending decisions, right? How can we decide who amongst the business, especially the SMEs, founders of SMEs, who should get the card, who should not get the card. Now, access to data information, whether it's from the banks, whether it's from the accounting softwares that these entities have, like Tally, etc., it's very disparate. It is, all across the board. Even integrations with systems like GST, etc., take a lot of time, although it's getting better over time. But it is something that really inhibits access to credit to a whole host of SMEs in the country. I mean, imagine if that access to information was democratized, how easily could a lot of players make their lending decisions. The other piece, that the second part that you mentioned, is that how banks can cope. I don't know if banks would be able to convert from their legacy systems to new age systems overnight. I believe that it will require both from a regulatory perspective some intervention. It may also require that banks co-create with fintechs, right? So it could be that some pieces are still sitting with the bank, the issuer, the license, the trust part of the business possibly could remain with the bank. The innovation, the user experience, the AI, the ML, the OCR, for example, that we use so extensively on our expense management platform, those kinds of things are probably best sitting with fintechs. And I think that could be a good way forward. And I think it's already happening in a very big way. But if bank backend systems do become more robust and more API friendly, that would be really phenomenal for the fintechs as well as the ecosystem.
Thanks, Avinash. We've got like 4 questions from the audience, but one common thread is they want the speakers' suggestions. Where are the probable gaps which needs to be filled in from a regulatory standpoint to catch up with the developments in payments? So I think this is cutting across to all the speakers. If I may improvise the question, what do you think? What would be one recommendation that you would like to give to the viewers that would help in the development or deepening of digital payments? I'll probably go with Avinash first.
Sure. So I'll give you 3 and very quickly, right? So the first one, which I mentioned, is can we have a stable, predictable environment with regulation? I'm okay with, any of the things that the regulator is asking, because the regulator is asking for things which are reasonably logical. There are, reasons for that. But if there is predictability, that's great. The second 2 are very specific. One is around things like video KYC. Video KYC is great, right? Can we expand it to non-banks? Can we expand it to entities beyond individuals and allow businesses to start, doing some form of video KYC, right? Because this is really, if you compare how the paper KYC works,
we've just completed this thing. So maybe,
One last quick point. The 2,000 limit on contactless. Can the customer set the limit instead of it being set by the regulator?
Thank you. Sachin.
No, I think the recommendations have all been made, predictability regulations and, a couple that Avinash spoke about. I'd like the industry to also, take cognizance of the fact that there have been opportunities that have been put on the table by the regulator. And if we can, as an industry, work towards, following through on some of those opportunities around tokenization, around risk-based authentication, for example, and stuff like that. I think that's where, we need to focus our energies as well.
Thank you, Sachin. Byas. Byas, you're on mute.
Rapidly remove, rapidly remove uncertainty. To me, that's the number one priority.
All right. Thank you so much, everyone and viewers. I'm sure you've seen diligently some of our speakers have tried to compensate the existing potholes. But thank you so much, IAMAI, for this opportunity. Thank you all.
Thank you.
Thank you to everyone, and thank you, Mr. Rakkappan. This was a really good session. Thank you to the audience. We will see you all in yet another exciting session coming up in a short while. And meanwhile, do visit our virtual exhibition space to check out our partner booths and their offerings. Please specifically visit Lyra's booth to participate in their special lucky draw and win exciting prizes. Thank you so much. Thank you to the panelists.